Nike just released its earnings report for the first quarter of the 2023 fiscal year, ending in August 2022. And things don't look too good. Although they did beat both top and bottom lines, the stock price is down 5% after hours. So, jump on the couch, and let's go over their main highlights for the quarter. I'll also share some interesting comments from John Donahoe, Nike's CEO, made on the earnings release. Before we begin, let me know in the comments, are you a Nike shareholder? Are you planning on buying or selling? Let's begin taking a look at what happened to the income statement first. Nike's total revenue for the quarter was $12.6 billion. A 3% bit compared to the $12.3 billion expected by the market. It was also a 4% increase in relation to the same period last year, when revenues were $12.2 billion. There was a big negative impact from foreign exchange fluctuations. Considering constant dollar revenue, revenues would be up 10%. Cost of sales went up 8%, from $6.5 billion last year to $7.1 billion this quarter. This increase was primarily due to elevated freight and logistics costs, lower margins on Nike Direct business, and unfavorable foreign currency exchange rates. And due to this higher increase in cost of sales than in revenues, gross margins decreased 2.2 points, from 46.5% in Q1 2022, to 44.3% now, in Q1 2023. Also, Nike's margins in North America had a big decrease, due to strategic actions from the company to liquidate its excess inventory, through markdowns and wholesales. Total selling administrative expenses were $3.9 billion in Q1 2023, an increase of 10%, when compared to $3.6 billion in Q1 2022. Earnings per share were 94 cents in Q1 2023. A 2% bit compared to the 92 cents expected by the market. In relation to the same period last year, earnings per share decreased 20%, when it was $1.18. This is mainly a result of the lower increase in revenues than in costs and expenses. Now, moving on to the balance sheet. When you sum up cash equivalents and short-term investments, Nike holds a pretty healthy balance of $11,876 billion. Although this represents a decrease of 13% from $13,695 billion last year, it's still a pretty good position. Their total debt is around $9 billion, and that they consistently generate high volumes of cash from operations. Inventories are very high, amounting $9.7 billion, which used to be $6.7 billion in the same period last year, representing a 44% increase, which is a pretty bad sign. Shareholder return. Nike returned to shareholders a total of $1.5 billion, being $1 billion through share buybacks and $480 million through dividends. An interesting fact here. Nike has been paying dividends every single year for the past 20 years. Before we finish up with the CEO's comments, let me know if you have any questions or thoughts on Nike's earnings report. I'll read and reply to all comments. Also remember to subscribe if you want to see more videos like this. Okay, so, John Donahoe said, and I quote, "Our strong start to fiscal year 23 highlights the depth and breadth of Nike's global portfolio, as we continue to manage through volatility. Our competitive advantages, including the strength of our brand, deep consumer connections and pipeline of innovative product, continue to prove that our strategy is working. We expect our unrelenting focus on better serving the consumer to continue to fuel growth and create value like only Nike can." That was it for Nike's earnings, guys. I hope it was helpful, and I'll see you in the next one.